All right, we're gonna move along into something that's a little more current, what's going on currently right now. And what I want to show here, this is corn production versus demand since 1982. A couple things to just notice in this chart. The production levels are more highly volatile ones in the light blue. The demand numbers are the ones that are the dark blue. But notice what happened from 82 to 02. You can kind of see the kind of trend line we're talking about. It was about that kind of growth. And then in 2002, we started to see the U.S. Renewable fuels mandates kick in, and we had to have ethanol demand start to pull on our supplies. You can see it took on an entirely different slope. But what's happened in the last 2 years is some crop failures that have actually started to turn production levels the other direction, and look at what demand's done. Demand didn't want to do that. That was a forced necessity because it wasn't going to work. Demand continued to trend the way it had. We were actually going to start getting into negative carryout situations. So we had to take prices to levels that would push demand levels below production levels. So that's what we've seen the last 2 years. Now, I'm going to re-examine the balance sheet. And again, I apologize for the numbers being a little small, but where I want you to focus is right here in these categories of demand side. And I want you to just really look at the differences in the 3 years shown. You've got 2009 on the left, 2010 right here, and then the current right here. And what I want you to look at, feed in 2009, 5.1 billion bushels. Last year we started to cut into feed. This year we're projected to be 500 million bushels less than we were 2 years ago. Now, that could be, the quality of corn has gotten a lot better in the last 2 years. We were talking about a lot lower test weights in 2009 than we are today. The bottom line is still, as the USDA counts it, 500 million bushels less used for feed this year. Look at exports. Projected to be over 300 million bushels less this year than they were 2 years ago. And about 200 million bushels than we were yet last year. But look at the third component, the major component of the demand, the ethanol spectrum. It's up 400 million bushels from 2 years ago. So what I would tell you is looking at what we did from demand 2 years ago to projected today, and even what it was a year ago, you can see where the cuts happen. Feed and exports. And that's very logical when you think about why feed, there's competitive products that can work into feed rations. Exports, there's other nations that can, at least if it's not shipping corn, it's shipping a corn substitute. So those markets were obviously the most likely to be cut, and that is exactly what's happening. The ethanol side, domestically, there's no other feedstock that's going to work at corn's level in our U.S. ethanol demand base. So it has actually grown. It is going to be the toughest sector to ration as we go forward. The only way you can really ration corn usage in ethanol is to take margins to levels where it's no longer profitable to grind the corn for the ethanol. Now that's starting to happen, and we have seen a few ethanol plants actually idle capacity. For the time being, realize that our cuts in demand are certainly going to take place in the feed and the export side of things. And I want to show some illustrations of how that's happened over the last 2 years. First of all, I also want to look at where we were last year. We ended up with a 1.1 billion bushel carryout. Okay? This next chart examines last year a little bit closer. First of all, I can't really see, but I think there were quite a few people that were here at the meeting a year ago that I put on probably. At any rate, last year's meeting took place about here. And I know we had some questions on, what happens if we have another sub-trend yield? And I said, I don't know where prices can go if we have another crop problem. I said, I don't know what price level will accomplish the needed level of rationing. Well, it turns out, the day we asked that question, we weren't far off from knowing what price level it was that would accomplish that job of rationing. So we started out last December with an 832 million bushel carryout. January, 745. February, March, and April, all at 675 million bushels. At that point, the USDA said, we're done. We're not changing carryout anymore. We're going to let the market do what it needs to do to take prices to the level that start to affect demand, and then we'll make changes in the balance sheet. They said 675 million bushels was pipeline level of supplies. It was a 5% stocks-to-use ratio compared to wheat at 40%. We were that snug a year ago. And look at what prices were doing. They were just trending higher because we kept seeing prices go up and demand go up and carryouts get lower. Eventually, about April or May, we had this incredibly large inverse in the market between the July contract and the December contract. And that inverse alone stopped exports. We essentially shut off the export valve in April of last year, and we started to see the market relax a little bit, come off its highs, and carryout started to grow. And you can see where we ended up, over a billion bushels last year, off of prices that were basically 625 and north. Now, one of the things I would say last year versus this year that's totally different is that a year ago, if you remember, we had a global problem. Almost every major exporter in the world had a crop problem. Whether it was Argentina, Australia, Soviet Union, US, and we all had crop problems. We were still called upon to ship about 60% of the world's corn exports that year. This year, we've got a lot of feed wheat that can work into this equation. So we've got an ally that will take that top edge off this market. Bottom line, what I just like thinking about, last year we did these marketing meetings, we said another year of sub-trend yields, and I don't know what prices need to do to cut the kind of demand that we were needing to do to make the balance sheets work. And this is what I want to highlight. World wheat production and usage. Production again in the blue, usage in the light blue. And as I said in the last chart, last year, you can see what production levels did versus the previous 2 years. Dipped big time. We had major problems in the world wheat market. This year rebounded big time to record levels. What's important to know, look at the demand side. It didn't just go to record levels, it smashed record levels. And when you talk about going from essentially 650 million tons up to about 680 million tons, you're talking about close to about 1.2 billion bushels of new demand right there. That wasn't there a year ago. And it's all because we've got the available supplies of world wheat with those 10 million extra tons of stocks this year that we didn't have a year ago. So the world wheat market has seen this. Look at what demand's done and look at why it's done that. This is Chicago wheat minus Chicago corn. Okay? We are currently overpriced versus Chicago wheat. We are premium. First time, I think it happened one time in '95. This chart starts in '96. It's never happened. You can see the kind of extremes we saw in 2007. We talked about that at the beginning where wheat production levels in 2007 were very snug. We had Minneapolis spring wheat trading $20 a bushel that year. And wheat was carrying a $5.50 premium to corn in 2007, 2008. Nowadays, we're 15 cents overpriced versus wheat currently. Now I want you to look at this. Remember 2007 and remember 2011 and apply that to this chart. This is world wheat feed usage, just the feed category. You can see it's up 18 million tons from a year ago. We're talking about 700 million bushels worth of new feed demand this year worldwide. Look at where it was in 2007, near modern era low. And then look at where it is this year, up 18 million tons from a year ago. And also look at what it was in 08, 09, and 10, kind of just middle of the road. Well, if you go back to your pricing comparison, you can see the price level was pretty much middle of the road. It wasn't really heavily skewed one way or another. This year, obviously a totally different situation, something similar to 2007. And you can really see by this chart and the last chart how the price level affects products that have substitutes for one another. And that's what we're seeing this year worldwide. A lot of new demand going in the feed wheat market.